Hey everyone, Ian King here with your weekly market insights update. And of course, Amber is out on spring break this week, taking a little time off. And joining me this week, I've got Andrew Prince, research analyst at Banyan Hill. Andrew, what's happening? You trading any of these dog coins lately?
Yeah. I've been looking at all these meme coins that are up 10,000% in the last month.
What a crazy market. I saw that the dog with hat is actually going to be advertising itself on the Las Vegas Sphere. They raised something like $600,000 to put the dog on the Sphere. We'll just show a picture of that so everybody can see what it looks like. So things have gotten a little bit crazy in crypto land. And, we've also been doing some other research. We got a big webinar coming up on March 19th, 1 p.m. Please check out the email sign up below to sign up for that. Andrew, the story obviously has been Bitcoin, right? We had the ETFs that were approved in January, and you found that the supply in actual Bitcoin that you can trade is dwindling quickly. Can you tell us about this report?
Right. So the idea is that just in the past week, the Bitcoin ETF saw inflows of 30,000 Bitcoin.
Mhm.
And so at this point, exchanges and miners and all these known entities hold about 3 million in Bitcoin. And, at this point, the other nine Bitcoin ETFs hold more Bitcoin than Grayscale, which used to be the biggest holder of Bitcoins in terms of which was a trust and then later converted into an ETF. So with these institutions all starting to, buy up all this Bitcoin, it's estimated that over the next 6 months, the amount of Bitcoin available to buy is going to start coming down, meaning that retail investors like you and me might have a hard time getting our hands on Bitcoin for a decent enough price or even at all.
Well, that's why you got to get it now, right?
Yep. Get in while you still can.
I mean, if you're a Strategic Fortunes reader, we told you back at 17,000 at last March. But I totally agree with you. And what's crazy about this is so the way the mechanism works is that if you're an institution or you're a retiree or just you're an investor, a retail investor, and you want to have exposure to Bitcoin, you can now buy an ETF. And so let's say you buy the BlackRock ETF and you buy $1,000 of it. The issuer has to turn around and buy that Bitcoin in the open market and then store it. So at the end of the day, the issuers basically go to a desk, like a big institutional trade desk, and say, okay, we need to buy this much Bitcoin today. And so they'll move it into their Bitcoin account so that they have that actual asset underneath the buyers who have the ETF. And that's really what's been moving the market lately. That, and there's a big date coming up, April 19th, I believe, the Bitcoin halving is going to happen. Andrew, why don't you explain to our viewers exactly what happens during this halving cycle?
All right. So during the halving cycle, as you know, the supply of Bitcoin is essentially released when miners on the blockchain mine for this token, and they get it as a reward, essentially, bringing out more of the liquidity in Bitcoin. Essentially, when a halving happens, the amount of rewards that the miners can get gets cut in half. So, essentially, they have to do more work and get fewer rewards. And in this way, we'll ultimately reach a point where there is a limited supply of Bitcoin, and so it's an asset that has a limited quantity and therefore has a very finite value. Ultimately, hopefully, one day.
Yeah, it's like so. Crypto's world is like the real world, right? Like in the real world, you go to work, you get paid dollars, and your dollars are worth a lot less in a few years than they were a couple of years ago. So, but in a sense, let me just share this chart, just to show everyone exactly what happens or what has happened in the past. So, what you're looking at here is a chart of Bitcoin going all the way back on the left to 2011, and this is when Bitcoin first started trading against the dollar on the Bitstamp exchange. This was Bitstamp and Mt. Gox were like the big centralized exchanges back then. This is even before Coinbase. And I've charted out these different halving cycles, basically from the lows, where the halving or the move started into the halving, and then how much it appreciated throughout the halving cycle. So the first one you've got back here started in 2011. The halving happened in 2012. Top to bottom, Bitcoin went up 33,279%. Then again in 2014, at the end of 2014, early 2015, the halving cycle started again. We had a halving in 2016, top to bottom, 12,179%. And then you fast forward here to the most recent one we had in 2020. That rally started in January 2019. Bitcoin was about 3,500. And then bottom to top, we went up almost 2,000%, 1994%. And lately, as this cycle has started, we really bottomed, I would say, in November of 2022 at about 15,000. And we've gone up so far about 388%. So you can see the expansion that Bitcoin has made throughout these periods. And by the way, this is what's known as a logarithmic chart, which means that the distance between 10 and 20 here on this axis is going to be the distance between 2,000 and 4,000. So this is better at showing you the percent return rather than, how many number digits it's actually gone up. But I think what's key here to understand is that we are still early in this cycle. And the last couple times Bitcoin has had a breakout, it's gone on, to double or triple its previous high. And I think that's sort of what we're heading for right now. As the ETFs take off, you've got all the supply getting sucked up. And you also have this halving cycle happening where the daily issuance right now is about 900 Bitcoins, Andrew. And then I think it's going to go to 450 issuance per day as of April 19th. At the same time, it was reported a couple of weeks ago that the ETFs bought something like 9,000 Bitcoins in one day, right? So you're already seeing 10 times the amount of supply taken off the market as being newly issued. And then the newly issued supply is going to get cut in half. We all took economics, or at least some of us did. Andrew probably did. I took like one economics course. What that tells you is basically that there's going to be a lot more demand than there is supply, and that usually leads to higher prices. So that is basically what we're looking towards with this halving cycle happening in April. And that's why I think people got to get positioned right now. So we're doing a webinar Tuesday, March 19th, 1 p.m. Please sign up on the email list below. We're going to talk about narratives, right? And Andrew, you've helped me with this research. I'm so excited to get this out to everyone. I just want to kind of give people an overview about the different Bitcoin cycles, because there was Bitcoin that went up so much, but then there were other crypto coins that really went up. And the key was to be in the right subsector of crypto. And the narrative is constantly changing, right? 2016, Andrew, do you remember what that narrative was back then? Were you in crypto back then? Remember the ICO boom?
No, I was very, yeah, I think I was still in college trying to figure my
Okay.
life out. So no.
So 2016, Andrew was still in college, but so we had this ICO boom where everyone was excited about Ethereum and all these other tokens you can make on top of Ethereum, and that led to a mania. You're around for 2020. You remember 2020's mania though?
Yeah, 2020, it was, a lot of different things, but I remember the main narrative was that you are going to do everything that you do in your normal life, but you're going to do it on crypto now. So
Yeah,
it's not YouTube. There's a crypto version of YouTube. It's not
right.
Twitter. There's a crypto version of
And
Twitter.
some narratives are still around. So 2020 also showed us the launch of decentralized finance, right? The very early DeFi projects really took off, and then also other competitive layer ones, which means that uh, Ethereum, was the only layer one blockchain, which allows you to create new digital infrastructure. But then 2020 saw the launch of, you had Solana, you had Near Protocol launch at the same time. Avalanche came about around then. And by the way, Solana, congratulations to everyone out there that bought Solana in 2020. We recommended it. We're able to lock in a 10,000% gain yesterday. I know people out there are very excited, and we're very excited for you. But we do think there's still upside ahead. But this cycle is going to have a different narrative, right? So why don't you just give our viewers just a tease of one of the narratives that we think is coming out in 2024 with this cycle?
So one of the narratives is the same thing we were talking about from the last cycle, which is DeFi, but decentralized finance, but it's taking on a slightly different twist in that it's about now the buzz is about tokenizing real world assets. And, this is something CEO of BlackRock, Larry Fink, mentioned at one point after his ETF got approved, his Bitcoin ETF got approved, where he said, the first step in crypto he sees is in the financial markets that he sees is crypto ETFs. And then the second step is tokenizing just about every real world asset that you can. So that means, land, art, property, real estate, anything. You can essentially tokenize them on the blockchain and start trading them that way.
Mm-hmm.
And, I even remember going to the NFT conference in 2021 in Miami. And I remember one of the most interesting projects was this company that was essentially trying to develop tradable NFTs that represented ownership stakes in a property, in a building, in a condo that they were developing. And so, yeah, we would start to see more of those types of things. That's something that's picking up steam in this cycle.
Yeah, and I think thank you for that. And I need to get like an on with Fink hat, right? Or maybe like rolling with Fink, right? Because
Right, right.
the guy is the CEO of BlackRock. Okay, they've got $11 trillion in assets. When he wants something to happen in the financial markets, like it's going to happen. Like all these other groups were trying to do a Bitcoin ETF for the last 10 years. The Winklevoss twins started trying to get an ETF approved like in 2013, right? Fink comes along and like in 6 months later, he's got a BlackRock Bitcoin ETF, and then they get $10 billion in like the first month and a half, right? So now he's saying we want real world assets on the blockchain. Guess what's going to happen? We're going to have real world assets on the blockchain. Like you might not agree with Larry Fink, you might think he's wrong, but I'm telling you, like the guy is like ingrained with the SEC. He's got basically, the lobbying power in Congress to make this happen. And just to mention the whole ESG movement, whether you're a fan or not, that was spearheaded by one man, Larry Fink. Now he's got the Bitcoin ATF, and he seems to be all in on crypto. I think he sees the future of finance, and this is like a guy you want to have on your side, right? So I love the real world asset narrative. I think it's going to be big. We do have a great opportunity to people invest in this real world asset narrative through the crypto markets. Check out that webinar on Tuesday, March 19th. Let's turn to the mailbag, Andrew. I know we've got a great question in the mailbag I want to address.
Right. We've got a question related to something we were discussing just a little bit earlier on the Bitcoin miners. People were saying, you see the price of Bitcoin going up, but you don't see the price of miners climbing alongside with them. And they were wondering why that is.
That's a great question. Well, imagine if you were mining gold, right? And you spent money on all your gold operations, and one day, out of nowhere, the amount of gold that was in your mine gets cut in half. I mean, that's essentially what's happening to Bitcoin. Like the amount of Bitcoin that these miners can mine on a daily basis is going to get cut in half. So that's why they're not going up with Bitcoin. And, I would just note that I've always had a very hard problem investing in companies that are in the extraction business, right? So like oil companies, energy companies, they're very tough to invest in because when you produce more of that asset, usually the price goes down. Gold miners are like the same way. When they produce more gold, then more people start mining, it gets more competitive. The price might get oversupplied because they're producing so much and the price goes down. Bitcoin's a little different because they like literally cut the amount that you can extract on a daily basis in half. But I just think the best way to invest in this is just going with the actual crypto itself. Don't make it too complex, right? The reason we were buying Bitcoin is because it is quickly becoming part of a diversified portfolio where a few years in the future, I mean, you studied like modern portfolio theory in college, right, Andrew?
Right,
Right?
right.
Having a
Absolutely.
bunch of like non-correlated assets, stocks, bonds, commodities. They'll be teaching that Bitcoin is going to be a part of that. And the other part is global debt to GDP is the highest it's been since World War II because countries have overspent because of they were fighting the coronavirus. And we are in a situation here where in order to get rid of the debt, they have to inflate it away. So there's going to be much more money printing that happens this decade. And an alternative to having the debasement of your own currency is owning something like Bitcoin or other cryptocurrencies. So I think that this is just one of these rare moments in time where a lot of these stars are aligning and things are coming together, and we're really excited to get this research out to everyone. So that's it for the mailbag, right, Andrew?
Yep, that's it.
Well, listen, I want to thank you for joining me this week. Your insights have been great. Thanks everyone for tuning in. Any questions, market insights at banyonhill.com, and we will see you Tuesday at 1 p.m. Take care.